Hello and welcome to Business Arena on TVP World. I'm your host, Marie Cato. Join me for the latest business headlines of the day. Polish state-owned energy giant Orlen has announced plans to construct 2 natural gas-fired power plants. The move is a part of the company's broader strategy, which positions natural gas as a key transition fuel. Both plants will be located in northern Poland, one in Grudziądz and the other in Gdańsk, with a combined investment of 1.4 billion euros. The Grudziądz facility, for which a project draft has been prepared and planning permission is pending, will be built next to an existing Orlen site currently under development. Meanwhile, the Gdańsk plant is at an advanced stage of planning. These announcements align with Orlen's new strategy, which envisions a significant increase in natural gas imports, projected to reach 27 billion cubic meters annually by 2035. And now for some news from the macro world. Unfortunately, this week has been one of many unpleasant surprises for the Polish economy.
Well, the Polish economy battles on despite ever-increasing headwinds. Monday saw the inauguration of Donald Trump as the 47th president, and with it, the increasingly real possibility of tariffs on European exports. The IMF calculates that these tariffs may cost the EU as a whole as much as 1 percentage point of GDP.
We have a $350 billion deficit with the European Union. They treat us very, very badly, so they're going to be in for tariffs.
Poland and the CEE are less directly exposed than their Western neighbors, but indirectly they may take a 0.5 percentage point hit at least. Then Wednesday saw the release of December industrial production data. It came in below expectations, posting a year-on-year seasonally adjusted gain of just 0.2%. Bearing the brunt of the slowdown are exporters, as stagnation in Europe and Germany in particular is stalling activity. Then Thursday saw another disappointment with the release of December retail sales figures. The sales are up, but by just 1.9%, which is below expectations and disappointing as the economy is counting on strong internal demand to push it through these hard times. And in another blow to exporters on Thursday, we're seeing a continued rally of the Polish zloty against the euro. It has gained over 1.3% in just this past week, reaching levels not seen since 2018. With almost 60% of exports destined for the Eurozone, this news hit hard. Economists are still optimistic as the Polish economy will be getting a big boost from the intake of EU funds over the next couple of years, and of course, it's also counting on its robust internal demand. But what will happen when EU inflows begin to taper off in 2027?
Well, after that, I think we should be preparing our companies to invest in themselves, and also, to allow more capital to be invested in Polish companies and fill the gap, this capital gap.
That's easier said than done as capital continues to flow into the U.S. market, which offers much higher returns. And finally, according to the IMF's Poland report, which came out Monday, the Polish economy will soon need to confront its approaching productivity frontier. That's the moment where existing technology will no longer create additional value. It'll need to innovate.
Polish Development Fund do a lot to boost innovation. We probably have to do it on a bigger scale, but, well, it's a good start.
Well, there are also numerous regulations from Brussels standing in the way, but possible deregulation is being discussed. For 2025, GDP growth is still projected to be between 3% and as much as 4%, but all eyes are on the Polish consumer.
And on the bottom line today, we want to use this week's industrial production and retail sales data for December 2024 to shed light on the broader issues faced by Poland's economy. 2025 presents itself as a challenging but interesting year, but time and resources need to be utilized well. Stay with us to find out more. The management of Poland's mega project, the Central Transport Hub, hopes to secure 280 million euros in funding from the European Union. The hub combines the new airport in the middle of the country and a high-speed rail line. The Central Transport Hub has submitted 3 applications to the European Commission covering the construction of a high-speed rail tunnel in Łódź and the design of the project's rail hub. Earlier in January, the governor of the Mazowiecki region signed the first decrees that allow for the construction of the project to commence. The hub's airport is to be adapted to initially handle 34 million passengers a year and designed to expand flexibly in the long term. The estimated cost of the project up until 2032 totals 31 billion euros. Cheap cement imports from the east are rattling Poland's homegrown industry. Domestic producers warn they're caught in an uneven playing field, risking jobs and potential investment if the government doesn't step in.
This cement kiln, the largest of its kind in Europe, helps uphold Poland's status as the continent's third biggest cement producer. Now that position might be taken over by another country. Poland brought in nearly 500,000 tons of cement from Ukraine in 2024, an astonishing surge of more than 1,500% over 4 years.
We must protect our domestic manufacturers from attempts by third countries, supported by subsidies, to take over entire market segments. Environmental protection matters, but we need resources to safeguard this market and the environment, and those resources come directly from industry.
In some months, imports from Ukraine soared by as much as 106% year on year. Observers link this surge to weaker climate obligations in Ukraine.
Cement production in Ukraine doesn't follow the EU's climate policies, so it isn't burdened with CO2 emission costs. That creates unfair competition, making cheaper Ukrainian cement replace Polish cement.
Industry executives emphasize that Poland's cement sector, worth billions of euros annually, must remain competitive. They are looking to upcoming reforms as a possible fix.
A mechanism like the CBAM border tax, to be introduced in 2026, could solve this. It's not protectionism. It aligns the emission costs EU companies pay with those of producers elsewhere who don't bear these costs.
CBAM, or Carbon Border Adjustment Mechanism, will only come into force in 2026, but the surge in cheaper imports has already taken a toll. Statistics Poland reported a 12% drop in cement sales for 2023, with a modest 3% rebound expected in 2024. But the industry warns that unless CBAM is enacted soon, Poland could lose its standing as Europe's third largest cement producer.
And that's all for our business news updates today. For more business stories, check out tvpworld.com.